Things are getting a lot more expensive in the US. I don't think that's a shock to anyone, and I don't think that's really something that a lot of people would disagree with. What's really interesting to me though is I saw this article on CNBC that talked about how Dollar General was opening up 1,000 new locations. However, these new locations are going to be geared towards wealthier shoppers. This means that they're opening up brand new stores with a different name, and things are going to cost a lot more there. Now that pretty much completely contradicts the idea of Dollar General. But then it sort of hit me about why they might want to start making stores that charge people a little bit more money. With things costing more, how exactly can the dollar store get away with charging people more? Earlier this year, Dollar Tree, Dollar General, and a lot of these other dollar store locations announced that a lot of their prices would be going up. Something used to cost $1, and now it's going to cost you around $1.25 because of inflation. So today I want to react to this article and talk a little bit about what these price increases mean, and more importantly, what they're going to mean for inflation and our economy. And because inflation is such a hot topic right now, it's kind of interesting to me how some of these businesses are starting to kind of get around it. And overall, I think that's important because as these businesses start to adapt and start to get around inflation, that is going to mean changes for you as a consumer. So let's break it down. But before we do that, my name is Nate from Minority Mindset News. And if you like this video, then smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world. And we can keep making videos just like this one. According to the CNBC article, the stores are called Pop Shelf and they were tested during the pandemic. Essentially, these stores will cost consumers around $2 to $5 per each product. This means these stores are targeting a different group of people than Dollar General does. All of the products at Dollar General hover around the dollar mark. However, these new stores called Pop Shelf are going to have more expensive price tags. And according to the article, they are targeting women with income ranges around $50,000 to $125,000. They tested them last year, but they were a huge success. And now, Dollar General plans on opening up around 1,000 of these locations all throughout the country. And we've talked a lot about this in our Market Briefs newsletter, and if you're not subscribed to that, you definitely should. It's totally free, and we deliver fresh breaking news to your inbox every single day. In those stories, Dollar Tree, Dollar General, and a bunch of these other dollar store locations have been opening up a ton of new locations over the last year or so. In fact, in 2020, dollar store locations were the biggest retail stores to open in the country. They have been exploding, and there's a couple different reasons for this. For one, these dollar store locations offer low prices, so you can pretty much put them anywhere in the country, and they're going to be successful. Every single person wants to save money, so it's only natural to open up a dollar store and have people shop there. In addition, because of the 2020 pandemic, the United States was sent into a recession. And when you have a recession, this means that people are going to be spending a lot less money. Dollar stores kind of fill that gap because if you can't afford to go to a big box retailer like Walmart or Kroger, you're going to shop at a dollar store instead. And in 2020, these dollar store locations exploded. There was so much stimulus being pumped into our economy, people had a lot more money to spend. And that was a little bit of a different reaction than we thought was going to happen. This is all due in part to the Federal Reserve. The Federal Reserve printed around $3 to $5 trillion in stimulus. Stimulus in the form of direct payments to Americans and unemployment assistance that was extended beyond state benefits. So even though people weren't working, they were still making money. However, they might not have been making all that much more money, so they still might not have been able to afford a lot of the big box retailers. So instead, they shopped at dollar stores for a lot of their needs. So dollar stores exploded all throughout the country. But by the end of 2021, they were running into a problem, just like every business ran into the problem of inflation. Inflation is simply when our monetary supply goes up. So when you put more money into the economy and you're printing more money and it's circulating throughout your economy, that means more people have more money to spend. And if people are spending a lot more money, then prices all throughout your economy need to go up because companies start to take on extra costs. they have extra costs of producing more goods, and they have delivery costs and shipping costs. All of that takes money, and eventually they trickle that cost down to you, which is exactly why when prices go up, that is a symptom of inflation. Additionally, as inflation continues to rise, companies have to pay their employees more. This is typically why you see a 2 to 3% raise in a lot of jobs every single year. That 2 to 3% raise meets inflation. That's all it pretty much does. Even though you're actually making more money every single year, you're really not, because the value of your money goes down and so does the buying power. You can't buy all of the same things that you could before with the same amount of money because everything costs more. Businesses eventually have to deal with that. And like I said, one of the ways they do that is by raising prices. However, dollar stores are in a really unique situation because they can't just raise prices to $4, $5, $6, and even $10 for their products. That would kind of defeat the purpose of a dollar store. So this was the issue that Dollar General was running into. They had to raise their prices in order to meet their bottom line, but inflation was rising at record rates. In October of 2021, the Consumer Price Index was released, and that basically shows how prices are rising from month to month. And what it showed was prices from September to October were rising. In fact, they rose by 6.2% on average, and that accounts for every industry in our economy. So with inflation rising, dollar stores have to raise their prices too. Like I said, they were raising their prices to $1.25. That doesn't look good to the same clientele that isn't really making much more money. This is a huge problem for dollar store locations because most of them are already relying on people in areas where there's not a lot of money going around. If even that goes away, then your dollar store locations are practically going to disappear. However, this is a way for a business to start coping with inflation. And it might mean the survival of dollar stores because they're really not dollar stores anymore. A dollar store has to keep its prices at about $1. If it doesn't, it's not really a dollar store anymore. However, Dollar General is going to launch a new line of stores. This new line of store is going to have more expensive products. So in the eyes of the consumer, they're going to be spending more. And in a lot of ways, consumers might feel like they're getting more value because they're spending more. And they give you more value, and it doesn't look like they're raising their prices at all. Because inflation isn't that far out of control, spending $3 on something today and then still spending only $3 on it tomorrow doesn't really look like a lot. These new dollar store locations can almost look like the good guys here. They're not really raising their prices, and from the moment they're launched, they haven't raised prices either. I mean, according to the article, it's not really clear if they're going to be selling different products or if they're going to be selling the same products. I mean, I would imagine that they're going to sell slightly different products because of the audience that they're trying to target. Remember, it's mostly women who make $50K to $125K a year, but they are pretty much foreseeing a problem in their industry. According to this article from CNBC, Dollar General anticipates its same-store sales to decline between 2.5 and 3% for this fiscal year. A drop in sales ultimately means less revenue, and if they have less revenue going around, then it's going to be harder all around to get products into their stores. And right now, we are facing unprecedented supply chain issues. In addition, like I mentioned, as inflation rises, wages need to rise too. And if the dollar store isn't really making any extra money, they can't exactly pay their employees more. And they really need employees because a lot of these stores rely on their brick and mortar locations. And this is not just dollar stores. Pretty much every business and every company out there is going to figure out how to cope with inflation. When the pandemic hit in 2020, everything shut down, and this meant that industries were unable to produce products. However, consumer demand was still super high, and today we are continuing to see that high consumer demand. This is directly contributing to our supply chain issues because none of these companies can keep shelves stocked, but people still want to go out and buy as much as they did before. If sales start to drop though across the board and inflation remains high, well then we may enter a period of what experts called stagflation. Stagflation is essentially when inflation is high, but your economy starts shrinking. In order for our economy to grow, people have to go out and spend money. This is exactly why the Federal Reserve encouraged people to spend money in 2020, and they printed so much money and essentially gave it to you for free. They wanted you to go out and spend money at these businesses. That way the businesses could continue to make money, and they could continue to pay their people and grow. When that is not happening, you either have stagflation or you have a recession. And one could argue that the Federal Reserve is directly responsible for inflation. This is because they are in charge of our monetary supply in the United States, and they decide how much we actually print. Now, in a healthy economy, the Federal Reserve believes that around 2 to 3% inflation is good. This is because people are employed and they're making money and they're going out and spending more. And this helps our economy grow because businesses are doing really well. Eventually, though, prices are going to have to start going up, so the Federal Reserve needs to print more. And the Federal Reserve does more than just print because of inflation. They also print because Congress passes bills, and the United States has debt to pay. So usually, inflation doesn't really go away. However, it can be accelerated for a variety of different reasons. We can see this in a specific industry, or we can see it throughout an entire economy. Typically, when it happens in an entire economy, that's because the Federal Reserve is printing so much money. However, we can also see it in a specific industry. Remember the 2020 toilet paper pandemonium? Well, that was inflation in the toilet paper industry. Everybody was buying so much, we had a supply and demand issue. Specifically, there was nowhere near enough supply to meet the demand of how many people that wanted to buy toilet paper. So, there was no toilet paper to buy, and the price of toilet paper went up. That eventually kind of leveled out, although I will say, at least in my grocery stores, it looks like toilet paper is starting to sell out again because our pandemic hasn't gone away like we've liked yet. But like I said, every business will face this. Every business will face having to raise wages every single year, and every business is going to have to face rising shipping costs and rising inflation. So if it's the Federal Reserve's job to monitor and lower inflation, then why aren't they doing it? Well, part of the reason why we have inflation is because the Federal Reserve needs inflation. Like I said, every single time you print more money, the value of each dollar goes down. And when the value of each dollar goes down, that means you have to pay more in order to buy things. But this situation can kind of work in your favor if you have debt. If you have a mortgage with a 30-year fixed interest rate, that means the payments that you are making today are not going to change at all for 30 years. So if you are paying $500 on your mortgage today, in 30 years, you will pay $500 on your mortgage. Now, other things are going to change. Taxes and insurance is going to go up because of inflation, but your actual mortgage payments will not change as long as you have a fixed payment. That means eventually that debt is getting cheaper and cheaper to pay off because inflation is going up, and now it takes more of your money to buy more things. That means the money that you're spending 30 years from now is going to be a lot cheaper. It's going to be technically less. The same goes for our United States government. The US has around $29 trillion in debt. So if the Federal Reserve prints more money, that means every time they go to pay off some of their debt, it's a lot cheaper, and it continues to grow cheaper over time. The debt they took on in 1980 cost them a lot less now because of inflation. So the Federal Reserve needs inflation because if the value of our dollars suddenly started to go up every single year, well, now it would cost way too much for these companies. Now it would cost way too much for the federal government to pay off its debt. The federal government would essentially go into default. But that doesn't happen, and these businesses have been coping with that for years by offering just a 2 to 3% raise. This one small adjustment allows people to spend more, and it allows people to meet their new standard of living, all because you give them that 2 to 3% raise, which meets inflation. Some businesses, though, will not be able to keep up with inflation if it rises too fast. So what can the Federal Reserve do about this? Well, the Federal Reserve has some options, but all of them require people to spend less money. So in 2020, the Federal Reserve dropped its benchmark interest rates to near 0%. The The reason they did this is so that people could go out and get a loan a lot easier. Now people have access to money, which means they can get a loan, and that money needs to come from somewhere, and it's basically printed from the Federal Reserve. More money circulating throughout our economy is a good thing, at least for the capital society that we live in. However, the Federal Reserve has announced that it wants to raise interest rates back up in 2022. It wants to do this at least one time. That means people will have a lot less access to money. In addition, if the Federal Reserve stops printing so much money, then people will stop spending so much money. Naturally, there's less money in the economy, and if there's less money to go around, fewer people will have money to spend. Every move you make has consequences. If the Federal Reserve pulls a lot of its incentives for people to spend money, there's going to be less money in the economy. This could ultimately hurt the stock market and hurt businesses because they will have less money coming in. Inflation will go down, but so will profits. And businesses have been relying on a lot of this economic stimulus for about 18 months now. And if this all disappears, then the stock market is going to have a little bit of a problem. The real estate market will be taking a hit too because people will start buying a lot less houses. But in general, I don't really know how businesses are going to continue to cope with inflation. I think one thing that we could see happen is the rise of automation. So a lot of these jobs that we have right now will eventually be deleted in 10, 20, and 30 years. The reason for this is because it's becoming way too costly for companies to have a person do that job. Instead, why don't we just have a robot do it? Robots work 24/7 and you don't have to pay them. The only thing you need to do is make sure that they are maintained. So as inflation continues to rise, you'll either see one, a lot of businesses go under, but two, you'll see a lot of businesses start to get creative. One way they do that is by opening new locations and charging people more. That is exactly what Dollar General is doing. And I wouldn't be surprised if a lot of businesses start following a similar model, whether that be with new stores or new products. And they'll get creative by just literally deleting jobs. Eventually, some of these jobs are going to go away and our workforce is going to rely on creativity. It's also going to rely on innovation and it's going to rely on special skills. This will ultimately make wages go way up, but there's also going to be a lot less jobs available. So from a business perspective, that might be a good thing. However, you cannot automate every single job. So we're still going to see a labor force of people. In the short term though, I don't think that will be good for people. I mean, nobody wants to see thousands, if not millions of jobs lost to automation. People rely on those jobs for income and it really helps. Beyond that, it keeps them surviving. And having worked some of these really bad jobs, those jobs are terrible. Nobody really wants them, they only do them because they have to. So I think in the long term, that is better for our society in general. Automation isn't perfect, but I think people using their brains and being creative and doing what they love is a lot better of a solution, even if that means jobs ultimately disappear. But now I want to hear from you on this issue. What do you think about Dollar General opening up some new stores and charging people more? Should it just stick with its dollar store model and charge people just $1.25 more? Or should it completely scrap the dollar store model and move on to this new expensive store? In addition, how do you think our labor force will eventually adapt to inflation? Will we see automation rise and take over pretty much everything in our businesses? Or will businesses continue to need to rely on people for the foreseeable future? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you liked this video, make sure to hit that subscribe button below. Keep hustling, money minds, and I'll see you all in the next one.